What are the top three things that you're looking in a startup? Hi, what's your name?
Vishnu Acharya.
What do you do?
I lead corp dev and investments and strategy for Razorpay. We also run a small angel fund called Marshot, from where we invest in early stage tech founders.
What sectors are you excited about? So what should young entrepreneurs expect as an initial valuation, let's say at a pre-seed level or at an angel level?
It can range from as low as 8-10 crores on the lower end to sometimes up to 50-60 crores on the higher end.
Hi, what's your name?
Vishnu Acharya.
How old are you?
I just turned 30 next month, so 29 today.
What do you do?
I lead corp dev and investments and strategy for Razorpay. Razorpay is one of India's largest payment companies. We also run a small angel fund called Marshot, from where we invest in early stage tech founders.
So I think it's a good time to ask you, like, if an 18 to 24-year-old guy wants to raise funds, what are the top three things that you're looking in a startup?
First of all, that's a large part of India, so I think applies to a large group of people. Three things I'm looking for in founders. One is unrealistic passion, because you really need that to build a large outcome, right? A lot of people say no. Second is grit and patience, because you have to do this for the long haul. Can't be 1 year, 2 years, it takes 10 years, 5 years. And third, a unique point of view on customers, because only you know who you're building for, why you're building it, and you need to have that point of view very strongly. So these are three things I look for customers.
What do you look in a business plan while sort of evaluating a pitch?
So I think a business plan must have at least 4-5 things, right? First, large market. Why is that market large? Who is in your market? Who's your customer? Is it a consumer? Is it a business? Second, what is the problem statement faced by these customers, right? What is it that uniquely you've learned by doing research with these customers or businesses you're building for? Third is, what is your solution? Why is it differentiated? How mission critical it is for the customer? And fourth, will the customer pay for this, right? And hence, what's the business you can make out of this? And lastly, what's really going to be your outcome, right? How large is the market? What's the outcome you can build in this market? So these are 4-5 things that a VC would look for in a pitch.
I see a lot of founder friends struggling with making a nice pitch deck. Basically, can you tell what kind of storytelling works? And you can also give an example if you want.
So I think honestly, pitch decks capture the same story as what you would want to verbally tell someone, right? But you're not there in person, so you're putting it on paper. Usually the same 5 answers that anyone would ask you in person, you try to put them on a piece of paper, right? On a deck, and you share that out. But what's interesting is that your ability to pay attention to a deck is much lower if there's no person on the other side, right? So try to make that deck more interesting from a readability perspective. Answer the same 5 questions that we previously discussed, but also then make it good on UI UX design. Because if you're building in technology, first of all, or any kind of consumer facing products, you'll have to be good on design, and maybe that's what will encompass a good pitch deck.
As a new entrepreneur, should I focus on bootstrapped versus funding? And if I should raise a fund, at what stage should I do that?
Yeah. So I think honestly, bootstrap as much as you can. You are the owner of your own equity. Faster you raise, the more equity you'll give out. But that having said, I think raise money, that's when it's needed for the business, right? You'll need certain money to build your business, whether it's a CapEx heavy business, OpEx heavy business, B2B, B2C, marketing, hiring people. So when you really need some money to build your business, that's when you raise it. It can be at idea stage if you don't have access to funds, or if you have some savings, then maybe you can invest a part of that and then raise money once you've got your early customers, right? And then you'll raise at a larger valuation. So yeah.
How should a founder find his first customer?
Honestly, anyone around you, right? Could be your friend, could be your family. If not, go out on the road, go hustle, figure it out. You should figure out who that customer, what's the pain point of the customer. If you need to talk to many people, go do that. Find out 5 customers out of maybe 100. And that's how you get your first few customers, right? There's no one answer for that.
Got it. As a founder, will you look at my credentials in terms of my education, etc.? Or will you keep it aside and just focus on what I'm telling you?
Yeah. So look, to be honest, in early stage, VC's job is part art, part science. And hence, usually there are markers and signals that they will operate off to make quick reads. But a good VC will always look beyond those markers and signals to have much deeper read on individuals. And hence, honestly, the answer is both, right? But I don't think it's either one. It'll be a good mix of both, and it'll come from conversations and insights by talking to founders.
For the new entrepreneurs, what sectors are you excited about?
Yeah, look, I think honestly, in India today, a founder can build in any sector, right? India's a very vibrant ecosystem. We're seeing that on Shark Tank. But if you ask me as a VC, I have to look at what are the returns that I could make if I was investing in a founder building in a category. So any category that is growing fast today, think of mobility, think of EV, think of solar financing, think of Gen AI based applications for other use cases. Those are great, exciting ones, right? Or think of something else that has been around for a while, but it's technology enabled and leveraged. And anyway, you can build a large business there.
So is it necessary to have some level of traction before coming to a VC to raise funds?
I would say it's better to do that because, again, like we discussed earlier, like a VC job is to really find the best founders out there in good markets and then back them with capital and guiding principles to build a business, right? To do that, really, the VC will have to, listen to the story of the founder, read the signals, and then kind of take the bet after building deep conviction. If you have traction or early customers or testimonials or some sort of, marker that says, okay, your idea, which is unique, addresses a unique pain point, and the customer will pay for this solution that you're thinking of. That is best proven only once it's done, right? The proof in the pudding. So yeah, if you have traction, it's much easier to raise funds.
What is your view on Shark Tank India?
I think it's one of the best things that have happened to the entrepreneurship community and sort of long-term outlook in India. I think it was always happening in pockets in Bangalore, in your Bombay, in your typical cafes. But now even your neighborhood uncles and aunties know what starting up is, what fundraising is, and I think it just shows how grassroots level problem statements are being identified by entrepreneurs on the ground everywhere, and then they're building for it to make large outcomes.
How should founders contact VCs and not get ignored?
I have two thoughts. One, good VCs, their job to find the best founders. So honestly, the good VCs shouldn't be hard to reach. Second, a founder's job is also to never take no for an answer. So I feel like every founder should use whatever means they have to reach out to VCs. Good VCs have their emails out there, sometimes phone numbers. You can get referrals via friends. But if not, be innovative, right? Do something that will catch their attention and reach out to them if you have to.
So right now there's a lot of noise. Everyone is looking at Shark Tank, but they're still unable to know what exactly should I follow to learn everything about fundraising and starting up. What resources, as per you, are very valuable today?
You're doing this short form, so it's tough. It's like you guys, right? So I think like if any founder wants to learn about any topic, right? Think of like EV, think of maybe quick commerce. There is like What the by Nikhil Kamath. That is doing a great job, right? You are going around asking these questions, right, and informing. So any short form content is a quick way to learn. If you want to go much deeper, read books. There are a lot of books that have been written. I'm sure you can recommend some. And generally speaking, I think just learn from your peer groups, right? There are a lot of programs. There's Antler program. There is On Deck. There is YC equivalents in India and YC itself. All of these are great ways to either learn from their video contents or just participate and from peer groups.
What is the one line that you want to tell people who want to start up but are procrastinating right now?
You're already too late. Please start ASAP.
So what is the magic number in terms of number of founders that you look at? Is it single, multiple, or like is it not even a thing for VCs?
No, I don't think there's a magic number, but two founders have worked well, right, in the past, if you see. But 5 have also worked well. Single founders have also worked well. They're always edge cases. On average, you've seen 2. The reason is that, there's a lot that's required to build a business. And usually there are complementing skill sets that 2 or 3 people can bring to the table. But at the end of the day, there will have to be only one CEO, right, as companies scale. So yeah, I think that's the set of founders. Everything works.
So what should young entrepreneurs expect as an initial valuation, let's say at a pre-seed level or at an angel level?
Look, I think you ask anyone, how do they value early stage companies? They're all going to give you different answers. There's no methodology or science here at an idea stage, because really what you're doing is seeing how much money is required to build a business, giving that money to a founder, and then taking certain ownership in the company for having given that money. So really, it can range from as low as, say, 8-10 crores on the lower end to sometimes up to 50-60 crores on the higher end at an idea stage, where a founder might raise anywhere from, half a crore to maybe 10-15 crores of money.
Stop procrastinating, start today. That was the episode, Future Founders. A lot of great founders and entrepreneurs are in line to guide you on your startup journey. Till then, stop procrastinating and start today.